Whilst high street banks are closing physical branches, one has bucked the trend. Wahed, a New York-based asset-backed money app, has recently opened its London branch near Baker Street. Now, Wahed operates on the principles of Islamic finance. Could these centuries-old principles benefit a world of depreciating fiat currencies, rising interest rates, and the tokenization of assets on blockchains? On this week's episode of the Crypto Mile, we speak to founder of Wahed, Junaid Wahedna. Junaid, welcome to the Crypto Mile.
Thank you, Brian. Pleasure to be here.
Thank you. So let's just begin. Could you explain the principles of Sharia-compliant finance? What are its restrictions and opportunities for investors, both Muslim and non-Muslim?
Absolutely. So there's one main concept when it comes to Islamic finance, and that's what we call the concept of riba, which loosely translates to interest. Now, what's really interesting, no pun intended, is it actually has historically applied to many different faiths, especially the Abrahamic faith. So if you look at Christianity, Judaism, the Catholic Church had forbidden interest completely at 0%. And over time, it really eroded, so to speak. Some states in America still have usury laws. So yeah, that's the main concept. There's a few other, you could say, not as important concepts. So for example, we're not allowed to take part in speculation in any kind. Anything we invest in or keep our wealth in has to be a real asset.
So that's going to really restrict the types of financial instruments that somebody who wants to follow the tenets of the religion is going to restrict their opportunities.
So as you can imagine, the financial ecosystem today revolves around interest, so to speak. Even in our everyday lives, we use a bank account, right? So when you keep your money in a current account or a savings account, your money is exposed to interest. The sole purpose of a bank as a lending institution is to use, their resources for interest-based lending, for profit lending. So yeah, it's a big issue for Muslims, even when it comes to wealth management. Portfolio theory has fixed income as a very important asset class, right? How do you avoid that? There's honestly never been a pure solution, and it's one of the biggest issues, I would say, that's been normalized and increasingly normalized in our religion. So even most Muslims, unfortunately, would not know of the specific restrictions just because it's been, what do we do? There's really no alternatives to stay away from interest.
So Wahed's debit card is backed by gold. Why is this better than using, say, a fiat currency as its reserve?
Yeah, our entire mission in life is to try and find a genuine alternative, for people with our same values and ethics, right? So our solution was we keep our wealth in real assets, but then you make it liquid enough to transact. Now we could actually choose any asset to back up the primary account. We chose physical gold for a very specific reason. So all our marketing surveys, all our research said that people are very comfortable with gold. Even historically, it's been God's currency. A lot of our communities are very comfortable with it. So that's why we selected gold to back this primary account.
So you did mention there like other assets that the accounts could be backed by.
Yeah.
Could you describe some of those other assets?
Yeah, so as part of our offering, we have completely diversified portfolios. So anything that fits in line with our values and ethics is totally fine. So we usually screen for, let's say, when it comes to equities, companies that have to do with tobacco or alcohol or gambling or pornography. So those are all removed. Or excessive debt companies, there's no fixed income. But all other assets are like real assets are good to go. So real estate's fine, commodities are fine. Equities screened, are totally fine.
So would you consider Bitcoin as a reserve asset for Wahed?
Not right now. I would not, and there's a few nuances to it. Keep in mind, this is a very contentious topic even in the Muslim community. But the way we look at it, it's still too volatile. There's still regulatory nuances. There's still a big discussion on whether it's a real asset or not. So we're not quite there yet in terms of comfort with it being a reserve asset.
Now, looking back at 2022, it was full of crashes in the whole crypto sector. Could the principles of Islamic finance have averted some of these dramatic crashes, such as the Terra crisis in May, and then, of course, the big FTX implosion in November?
Absolutely. So because we follow the rules of Sharia-compliant and Islamic finance, we had to kind of go through the checklist, right? So no leverage. And that was a big part of why these crashes came to be. No speculation. no derivatives or synthetic assets and instruments. So I absolutely feel it could have been averted if we were to be following the Islamic finance system.
Now, will Wahed ever enter the mortgage market, given Muslims currently have a limited choice, and even those who offer Islamic mortgages, those conditions are just too high a bar to actually access?
Yeah, absolutely. So if you look at, how we're exposed to interest in our daily lives, there's two sides, right? There's the savers, people who have excess money, but then there's actually a huge part of the population that are in debt. And they're exposed to interest in a more negative way where they're, paying out the interest. And the majority of debt today, 80% of it or something of that sort, is mortgage debt. It's, the housing crisis, and it is just getting worse. So we do need to come up with a solution for that. And we have a theoretical hypothesis of how we're going to do that. It's actually a concept called shared ownership. So instead of a loan being given to the property purchaser, you invest in their house. So, and it's actually out there today. So there's companies in America that already do this. Even in the UK, there's, relatively large institutions. It's just not known to many people. Right. So let's say you want to buy a house and you have the 20% down payment. This company comes in and buys 80% of your, the remaining house. So if your house price goes down, they take the hit as well, unlike a mortgage. In a mortgage, you have to pay me my principal no matter what, right?
You spoke about so if you're doing a shared ownership or sort of fractional share of a house, you might buy into 20%, company comes in and buys 80, and then you buy back over time?
Absolutely. So it would depend on the structure that the company uses, but that's absolutely, the reasoning. So you should be able to buy back the rest of the house. There's different schedules, but you buy it at the market price. So if the house price goes down, you buy it for less. It's as simple as that.
Yeah. Well, thank you, Junaid, for coming on this week's episode of the Crypto Mile.
My pleasure, Brian. Thank you.